Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we will take a look at the New Zealand dollar, so we will take a look at our setups that we have on different currencies. So yesterday we have taken a look at the British pound. Today we will take a look at the New Zealand dollar, so we will try to in every video change the currency just to not miss something interesting on the setups that we are tracking. So one of them is the bullish setup on the British pound, but right now it has some additional political risks. As you know, this Theresa May is coming to the Queen with the request to dismiss the Parliament for preliminary early elections. So that brings additional risks. So that's why for a while maybe we'll see some flat action on the Great British pound. In general, the upward action that we have expected yesterday hasn't happened due to relatively positive news from the United States. Fed Reserve has confirmed their track on rate hiking, and in general there was positive statement. That has pressed, or better to say, supported the United States dollar, and you can see some downward action as on the euro currency and the Great British pound. But that was not really dramatic action, so this was minor bounce out from the previous tops. On the euro currency, guys, we probably will avoid trading euro for a while, since you know the obvious reasons. This will be elections in the weekend, and we have just one labor session or trading session till the weekend, so I do not see real necessity to take the additional risk in trying to dive in this mess with the euro currency. So we have specified the target that could be met before elections. So we said that maybe market in general shows the bullish action. Maybe it will creep to 10980 area. This today session or tomorrow, if non-farm payroll release, for example, will be not as positive as expected. Something of that sort. But major, we will return back definitely to the euro currency after the elections. So because market will show the reaction on the results, and I'm currently actually do not exclude totally the possible surprise. So market really could get a big surprise in the weekend. That's why I do not see right now reasons to trying to trade the euro. That's why it's logical to turn to other setup that we have on New Zealand dollar. Actually, we have discussed this in our weekly research. So what we have on the daily chart, you can see the same picture as we have discussed. So as market has completed this minor ABCD targets, completed 127 extension of the butterfly, retracement has started. And we have discussed in the weekend the depth of this retracement. We said, well, we have some levels on intraday charts, conference resistance and 618 resistance. So we said, well, we would like to see the market will show minor retracement, and even will show the 618 will not be the trader chart. Why we returning back to this scenario particularly today? Because, guys, here you can see market has formed very important candle. This candle calls a reversal session. Why? Because market opens, takes the top of the previous session and close below the lows of the previous session. Here market mostly engulfs even two sessions. This calls as a reversal session. And this usually indicates the reversal to the downside and continuation of the previous bearish trend. Because one of our reasons why we think that downward action should continue, if even we will not take into consideration different geopolitical, financial backgrounds, so we're speaking only on technical picture here. Because we see a real acceleration to the downside, very small retracement. So taking a look, fast acceleration down. Here it was also fast drop in the butterfly, fast drop right to 27. Usually, when such action takes place, market continues to the 1618 target. And this target is very important because this actually is the completion point of our large APCD DE patient. That's our trading plan. So our context on the daily chart. Also, we have some other reasons on the weekly chart. We have discussed this in the weekly research, so if you would like to know more details, you could read this research in our forum. And right now, we're interested in what we can do next. So this candle, what's important conclusion we could make here, is that this candle actually indicates the end of this upward retracement. So on the 4-hour time frame chart, you could see definitely the 618 resistance 69.70 area has stopped this upward action. Market right now is showing the fast drop. So currently, guys, here we do not see any interesting patterns here because 1, 2, 3, 4, 5, 6 bars to the downside is not sufficient for any Jordan patterns. On the hourly chart, initially I thought that we could get the double ripple buy here, so maybe this still could happen because we have thrust down, not really bad thrust. Close above the 3x3, close below and creating the new lows. This retracement was small, less than the 3/8 of the thrust. That's why it creates the possibility for the double ripple. But here, market currently is continuing to move down, and to get the double ripple, we need to close above the 3x3, second close. If this will happen, we could get the bullish, short-term bullish pattern on the hourly chart, and we could count on some moderate retracement up. Usually this is the 50% of the thrust down. It's rather solid retracement. But if we will not get any double ripples or something of that sort, we will turn to our common job here is just waiting for some meaningful bounce with a possible take in the short. Because market right now is turning again to the extension mode, and next destination point will be here. That's why, as we have estimated that retracement is over, right now we need to wait for watching for this downward action and watching for any retracement to the fib levels that could let us to take the short position on the New Zealand dollar. So that's our current view on the kiwi, and it seems that let's hope that we will see the target completion very soon.